All right, ready to dive into some municipal bonds?
Always ready for a good bond deep dive.
Awesome. And today we're looking at this video you sent over. What are municipal bonds? Are municipal bonds safe and tax-free? Municipal Bond Investing Basics.
Oh, yeah, that's a good one from Diamond Nest Egg.
Definitely. So I think our mission here is to, really figure out what municipal bonds are all about,
Yeah.
see if they're actually a safe investment, and then,
Right.
if they might be right for, well, for anyone listening, really.
For sure.
So let's just jump right in, starting with the basics. What exactly are municipal bonds?
Well, you can kind of think about it like you're lending money
Okay,
to your local or state government.
interesting.
So they can do things like build new
Yeah.
schools, fix roads, upgrade water systems, that sort of thing.
Makes sense.
You're basically becoming an investor in your community.
Oh, I like that.
Right.
Way better than just like boring old bonds.
Yeah, exactly.
Okay. But, the video mentioned something about $4 trillion
Oh, yeah, yeah.
at the end of 2022.
At the end of 2022, the entire municipal bond market was worth about $4 trillion.
Wow,
That's a lot.
that's a lot of money. What does that even mean for, someone like me?
Well, I think it just shows you that it's not like some small niche corner of the financial world.
Right, right.
It's a massive market
Yeah.
that's well established. And, a large, diverse market often means more stability,
Okay,
more investment options for people
that makes sense.
with different risk appetites.
So it's not just for, like, Wall Street, right?
Not at all.
Okay, good. Good to know.
It's for everyone.
So then why would I even think about municipal bonds? With so many other investments out there, what's the big appeal?
The big appeal, taxes.
Taxes.
The tax advantages are huge, especially for people in higher tax brackets.
Oh, okay.
So the interest you earn on most municipal bonds
Yeah.
is completely tax-free at the federal level.
Wow.
And in some cases, depending on where you live,
Ah.
and the specific bond, you might be able to avoid state and local taxes too.
No way. So I could earn interest and not have to, give a chunk of it to the IRS.
Exactly.
That sounds amazing.
It really is a great benefit.
So how does it actually work, this tax magic?
It's not really magic, just,
Yeah.
Smart investing.
Right.
Say you're earning, I don't know, maybe like 5% interest on a regular corporate bond.
Yep.
Depending on your tax bracket, you might end up having to pay a good bit of that back in taxes.
Yeah.
But with a municipal bond, you get to keep more of what you earn.
Gotcha.
And that extra money can add up big time over the long run.
For sure. Especially if you're reinvesting it.
Right, exactly.
Okay, well, that's definitely a point for munis, for sure.
Right.
The video also mentioned they usually pay interest, twice a year.
Mm-hmm.
And you get your principal back when the bond matures.
Yeah, so you lend your money for a certain amount of time,
Right.
get regular interest payments, and then at the end of the term, you get your initial investment back.
Okay.
Assuming, of course, that the issuer doesn't default, which is something we'll get to later on.
Yeah, definitely want to talk about that. But first, I got to know, there are different types of municipal bonds, right?
There are, yeah.
That's where I start to get a little confused.
But Corey, it's not too bad.
Okay.
The two main types are general obligation bonds, which are often called GO bonds,
Okay.
and then you have revenue bonds.
Okay. Go bonds and revenue bonds.
Exactly.
So which ones are safer?
Well, GO bonds are often considered the safer option.
Oh,
Tell me more about those.
sure. With the Go bond, you're basically lending money to a government
Mm-hmm.
that promises to use its taxing power to pay you back.
So, like property taxes.
Exactly. They're backed by what's called the full faith and credit of the issuer.
Interesting.
So you're essentially relying on their ability to collect taxes to make sure bondholders get paid back.
Okay, that makes sense. But, what if a city or state hits hard times and they can't collect as much in taxes?
That's a great question. Yeah. And it gets to the whole risk versus reward thing.
Right.
While Go bonds are generally seen as pretty low risk, there's always a chance that the issuer could face financial difficulties.
Gotcha. So they're not completely foolproof.
Right. Nothing is.
Okay, good to know. So what about those revenue bonds?
Revenue bonds.
Yeah, how do those work?
Well, with a revenue bond, the repayment's tied to the income generated by a specific project. Like, imagine a city wants to build a new toll bridge.
Okay.
They could issue revenue bonds
Okay.
to fund the construction
Gotcha.
and then use the tolls collected
Right.
to pay back the bondholders.
Ooh, that's interesting.
Yeah.
So it's almost like I'm investing directly in that bridge
In a way, yeah,
and hoping people use it.
pretty much.
Okay, that sounds a bit riskier than just, relying on a government's ability to collect taxes.
You're right, it can be a bit riskier.
Okay.
Revenue bonds are often tied to things like toll roads, airports, utilities.
If the project's successful and makes money,
Right.
the bondholders are in great shape.
Yeah,
But if it struggles,
not so much.
well, then there's a higher risk of not getting fully repaid.
That makes sense. It's kind of like investing in a business, right?
Exactly. More potential for profit, but also more risk involved.
Okay.
Ah.
Okay. And the video even showed this table from Schwab comparing yields
Yeah. Yeah.
for all these different types of bonds.
Right.
And it seemed like those local go bonds had higher yields than state go bonds. And then the revenue bonds had the highest yields out of all of them.
You noticed that, huh? That's a good observation.
Yeah, I was like, huh, interesting.
That actually perfectly illustrates a really important principle of investing. The higher the risk, the higher the potential reward.
Right, right.
Yeah.
So if I'm understanding this correctly, revenue bonds could have a higher potential return,
Yeah.
but there's also a higher chance that things could go wrong.
That's the trade-off you have to think about.
Definitely a lot to consider. So let's take a quick break, and then we'll come back and really unpack how safe municipal bonds really are.
Sounds good to me.
See you in a sec. All right, so we talked about what municipal bonds are, why people like them, the different types. But now, the big question. How safe are they?
Yeah, everyone wants to know that.
Right.
I mean, for
Well, the
sure.
video mentioned that unlike treasuries,
Right.
municipal bonds have some, credit risk.
Exactly. It's a key difference.
Okay, so what does that even mean?
It means there's a chance, however small,
Okay.
that the issuer, the government you lent the money to,
Right.
might not be able to pay you back.
Well, like they could default.
Yeah, exactly.
Yeah.
Default basically means they can't meet their financial obligations.
Huh. And that actually happens.
It's rare, but it does happen.
Okay, so how often are we talking?
Well, the video brought up some pretty big examples, like Detroit back in 2013,
Oh, right. Yeah.
and then not too long after that, Puerto Rico?
Puerto Rico?
Yeah, they had a lot of economic problems.
Oh, wow. What happened there?
Shrinking population, high unemployment, just a lot of debt. All of that led to them defaulting on, get this, about $74 billion worth of bonds.
$74 billion. That's a lot of money.
It was a huge deal.
Wow. Okay. So defaults can happen.
Right.
And they can be pretty significant.
They can.
All right. So how do munis compare to, say, corporate bonds risk-wise?
That's where it gets interesting. The video used some data from Moody's.
Moody's.
Yeah, they're a credit rating agency, very reputable.
Okay.
And what they found is that municipal bonds actually have lower default rates than global corporate bonds.
Really? So, like, even with those big defaults, they're still less risky than some big company going under.
On average, yeah.
That's surprising.
It is. But think about it. Municipalities have the power to tax.
Right. Right.
That gives them a pretty stable revenue stream.
True. True.
Plus, they provide essential services that people need, so they're more likely to prioritize paying their debts.
That makes sense. It's not like investing in some tech startup that could just disappear overnight.
Exactly. Though, of course, if you're truly risk-averse, treasuries are still the safest bet.
Yeah. Those are backed by the whole U.S. government, right?
Exactly. Never defaulted.
Okay. So treasuries are the safest, but they usually have lower returns.
That's the trade-off.
Got to find that balance.
Always.
Okay. Back to this Moody's data, though.
Yeah.
The video said that municipal bonds and what they called competitive enterprises have the highest default rates.
Oh, right. Those are the riskier ones.
So what exactly does that include?
Think like healthcare, higher education, things like stadiums, convention centers.
Okay.
They're more affected by the economy, by competition.
Right.
So their ability to repay can be more uncertain.
Gotcha. So if I want to play it safe, I should avoid those.
It's something to consider, for sure.
Definitely a lot to think about.
The key is to do your research, understand the risks, and make choices that match your own risk tolerance.
Makes sense. So with all this talk about risk and reward, I have to ask, are municipal bonds even right for me?
The million-dollar question. It really depends.
Okay, well, help me out here.
The video had some good points about this.
Okay, lay it on me.
First, your tax bracket. That's huge.
Right, those tax advantages.
Exactly. If you're in a high tax bracket, those savings can be massive.
So the more taxes I'm paying, the more appealing munis become.
Basically, yeah.
Interesting. What if I'm not in a super high bracket, though?
Well, they can still be a good option,
Okay.
especially if you want a relatively safe, stable investment.
Right.
But there's another thing, the type of account you're using.
Like a regular brokerage versus a retirement account?
Exactly.
Oh, okay.
The video is pretty clear. Munis are usually best for taxable accounts.
Why is that?
Because tax-advantaged accounts like 401ks and IRAs,
Yeah.
they already have tax benefits.
Right.
So you wouldn't get the extra tax savings from munis in those.
Like double dipping on tax breaks.
Exactly. Doesn't really work that way.
Makes sense. Okay, so what else do I need to consider?
Well, we keep coming back to this, but your risk tolerance.
Right. Higher risk, higher potential reward.
Exactly.
Lower risk, lower potential reward.
It's all about finding the right balance for you.
Okay, so if I'm thinking, hey, treasuries are safe, but maybe I can handle a little more risk,
Yeah.
then munis could be worth looking into.
That's a good way to think about it.
Okay, but like you said, diversification is key.
Always.
Don't put all your eggs in one basket.
Definitely not.
Got it.
Yeah.
So munis are a good option, but not for everyone.
Exactly. It all depends on your specific situation, your goals, your risk tolerance.
All right, well, that's a lot to digest. Let's take a quick break and then come back to wrap things up and see what we've learned about whether munis are right for us. Man, we covered a lot about municipal bonds today.
We did. More to them than meets the eye, huh?
Definitely more than I thought, that's for sure.
Lots of nuances to consider.
Yeah, before we wrap up completely, maybe we can do like a quick recap,
A recap, sure. Yeah, that's a great idea.
just to make sure we're all on the same page about a munis.
Absolutely.
So, okay, first things first. Municipal bonds are basically loans to local or state governments,
Yep, exactly.
which means, you're helping fund those public projects.
Right, exactly.
Like we talked about, the schools, the roads.
Important stuff.
Yeah, I like that.
Makes a difference.
And of course, there's that big tax advantage.
Oh, yeah. Can't forget about that.
Most of the time, that interest you earn is tax-free.
At the federal level, for sure.
Federally, yeah. And sometimes even at the state and local levels, too.
Depends on where you live, which bond you choose.
Exactly.
It can really add up.
Oh, definitely.
Mm.
And then there are, like, the different types of muni bonds,
Right.
each with its own risk level and potential return.
Right, we talked about the DOSGO bonds backed by the government's taxing power.
Right. Those seem pretty safe.
Generally speaking, yeah. Safer than revenue bonds, at least.
Right, because those depend on how well a specific project does.
Exactly.
Like if that toll bridge is actually making money.
Gotta have those cars crossing.
Exactly. And then there was that whole thing about, well, munis DO carry some risk.
Some credit risk.
Right, that the issuer could default.
Can't forget about that possibility.
But then we looked at that Moody's data,
Oh, yeah. The default rates.
and it turned out that munis actually have a lower default rate than corporate bonds.
Lower, on average, than global corporate bonds, yeah.
That was a shock to me.
Yeah, I think a lot of people assume that companies are safer.
Right. But the numbers tell a different story.
They do.
And of course, treasuries are still the safest.
Oh, absolutely. Backed by the U.S. government.
Gold standard.
Definitely.
But, lower returns too.
The trade-off, always the trade-off.
Right. Got to find that balance.
That's investing in a nutshell.
It really is. Oh, and one last thing that I thought was interesting.
Yeah. What's that?
The whole thing about competitive enterprises.
Right. They have the highest default rates,
Yeah. Those are the riskier ones.
like the hospitals and universities.
Exactly. More sensitive to how the economy's doing.
Really make you think.
Definitely highlights why research is so important.
Before you invest in any bond,
Especially Munis.
definitely.
Got to understand the risks.
Yeah, and make sure they fit with, your own strategy.
Your goals, your risk tolerance, all of that.
Exactly. So basically what we've learned is that municipal bonds can be a really great addition to your portfolio,
They can.
especially if you want that tax-free income.
And you're okay with a little bit more risk than treasuries.
Right. But they're not for everyone.
Nope, not a one-size-fits-all situation.
It all comes down to, your own financial picture, your goals, all that.
Exactly. So do your research, folks.
Yes. Talk to a financial advisor.
If you need to
I mean,
get some personalized guidance.
this deep dive has been super helpful, though, I think.
I hope so. Giving you some things to think about? Yeah, it has. Now I'm kind of curious, actually.
About what?
Given everything we've learned, like what type of muni bond, if any, would you be most interested in? And why?
Ooh, that's a good question. I'll have to think about that one.
Yeah, it's something to ponder.
For sure.
Well, we've reached the end of our deep dive. Thanks for sticking with us.
Thanks for having me.
And we hope you learned a ton about municipal bonds. Don't forget to check out the show notes for links to that video we talked about.
And that Schwab table.
Yeah, and some other resources too.
Happy investing, everyone.
Until next time,
Yeah.
keep on learning.